Welcome everyone. Just let me know if you can hear me fine. Awesome, thanks. Get started in about 3 minutes. I know you folks like to hear that pop of that Rona. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, it is Friday. We've been all waiting for this all week. Markets are somewhat quiet overnight. We're down about 4 or 5 handles on the S&P futures. Not a lot going on before the employment numbers come out. Yesterday was, as I thought it would be a bias to the upside. This market wants to go higher, regardless of how many videos are out on the planet talking about how the market is coming to an end and there's a collapse in August. So far, we haven't had that. So I won't get too much into the troll mode here, but I will want to emphasize that the markets are looking at really the employment numbers. I've been talking about this for maybe 6 weeks, that I think there's going to be a deterioration in those numbers. And we'll see. Based on ADP, if you use that, tomorrow's likely to be a disaster. For some reason, I think they're going to come out reasonably well, or the interpretation of how they will be looked at will be bullish. No matter what, it's one of those things that all news is good news right now. So if it comes in as expected, which is 900,000 new jobs, unemployment to rise 1 tick to 5.7 from 5.6, if it comes in like that, then probably what we're going to see is a positive reaction. If it comes in lower and misses, maybe below, I mentioned last night, a number like 300, then it's going to be a sign that the Fed has to keep the pedal on the floor and keep pushing the markets forward. So I think the interpretation, no matter what, will be bullish. We'll see. The markets are about as neutral as they could be from the standpoint on a short-term basis, and I've talked about this a lot, is the intermediate trends are what's really driving this market. And we see this happen a lot, where the daily and the short-term trends will just go into a sideways, slightly upward slope. There's no VIG. I talk about that a lot on a short-term basis. And then we see the driver is the intermediate or the weekly charts, and that just kind of continues. The monthly trends are incredibly robust. They're not going to roll over anytime soon. And as I've always said, it doesn't mean that the market can't back into support levels. It just means there's not any major top coming in this market at this time. And I also, just kind of flashing back when I was getting ready for tonight's show, is remembering that I said that it's not going to be summertime blues. It's sort of been summertime blues, but it's just been a grinding higher. Last month we were up over 2%. And, we already started off this quarter pretty good. And we'll see how it all plays out. I'm not going to go through the longer term charts. I did do that on the live stream on Wednesday, so make sure if you want to cover that, go back and watch the indice coverage that I did on the live stream. That will help you a lot, at least understand where I'm thinking markets are going and those type of things. Now, I haven't really unpacked the projections for the market lately, so I will do that. I'll try to do that next week as we come in after we see these numbers that are coming out today. So we look back on yesterday, and there's a number that happened yesterday that I will discuss further after the market tomorrow, otherwise on Sunday night, is we had claims come in pretty much as I expected them, around 390, 385. And the continuing claims came in at 2.93 million. So we got under that 3 million mark. And I mentioned this in last night's video that I was actually expecting to see, I moved the post back to 3 million, and we nailed it today. And just in a general sense, what this is telling us is that these jobs are still improving. That's a good backdrop on the improvement. So it'll all be about the employment numbers we see today and the reaction that we get. If there was some kind of crazy reaction, maybe I'll come up and do a quick live in the last hour or something, but I'm not promising that. It's just, if markets are within the context of what I'm going to cover tonight, then we'll do that. I'll also go through a few more details as we come into the end of the week. I always call this Thursday night is the end of week review, even though there's a whole nother day to go, even though we're 12 hours out from the U.S. Open. So we're a ways away from all of this stuff, but just anticipating a lot of the stuff that's going to go on. There's really, the only other thing I want to mention before we get into the technicals tonight is, this master planning that's going on. We're watching something really unique on the government side, especially with all the noise around the infrastructure bill and those type of things. And what we're really seeing here is just it's a master plan. So now 50% of the cars are going to have to be electric. If you figure out the number of the cars that has to be, I think it's 50% of all the sales. And I'm not sure where we're getting all the materials, where we're getting materials for batteries, and how we're actually going to achieve that. It's a nice goal. I get the clean energy thing. I'm totally for it. But I don't see how we get there, especially when at least the current administration is not embracing mining or any of those things. In fact, it's getting harder and harder to get new mining leases. And I saw a really interesting report the other day is that the coal mines, like in West Virginia, right? They have discovered there is substantial amount of these materials needed for these batteries, but they're trying to figure out or trying to finance a way to get to this and convert a lot of these coal mines into a place to get some of these materials they need, the silicones and a bunch of other stuff that they were talking about. So I think that hopefully we'll be able to embrace that. And it's interesting also in the world of the green world that's unfolding right now, one of the heaviest demands on anything right now is coal. There's a very strong demand for coal. Coal prices are actually going up. I did see a comment, by the way, in the timeline that somebody was asking about the uranium. If you'll give me a symbol that I can look at, then I'll be glad to go through that later in the broadcast. I did see your Twitter question earlier today, so thanks for that, and I'll cover that here in a few minutes. But this whole central planning thing of mandating, you name what the mandate is, but there's a new view of how the government's going to work. I can't wait to finish the video I'm working on. It's like a major project, but it's going to be, I think, worth watching. And I was teasing you folks the other day, it's called the changing of the guards. And there's a really interesting scenario that I'm seeing. And I continue to tell you folks all the time, if you want to figure out what's going to go on, just fade those guys, fade the Harry Dents, fade Ray Dalio, all these guys. And one of the things that I talk about in this video is that a lot of folks are looking at the world through the old school prism of capitalism. And in my opinion, there's something else going on. And I've been rattling on for the better part of the last year about this. So this is not something new that you will hear, but it hopefully will be articulately described in this video. So just quickly looking back just a little bit here on top of the claims, yesterday's activity, we saw actually a pretty broad advance. So this was encouraging to me on twofold, is we saw 9 of 11 sectors positive. Energy and financial were leading, up 1.3 and 1.2 respectively. And then we saw the 10-year come right back to where I told you last night that I thought we would rebound right back into the 1.21, 1.24 range. We got up to 1.22 roughly, just shy of that. So that number is coming in, and I think we'll continue to see some things after the news that we're waiting for tomorrow comes out. Let's go ahead and get into the database, because there was some things there that I want to talk about, and that'll give you some pretty good insight in what is going to be going on as far as our database goes. So looking at the database, we did get 976 new buy signals, 353 sells, so we had a 9-to-3 buy-sell ratio, which is pretty positive. and we're now back above 42%. Last night we were just a touch below it. The it's now at the 43.82%, so we're just above it. I would like to see us there's another number I'm going to start putting out there, and if we're going to see this market start to trend higher over the next several weeks, which I think is very possible, and maybe even accelerate and get some of that VIG that I talk about a lot. I think what we're likely to see here is this acceleration, and the key number I'll be watching on the database on a short-term level is going to be 48%. We'll get above 48%. That's kind of a clear go with power up mode and move us to 62, 68%. That's typically what goes on in the database if we can get traction above that and also start to see some momentum and some come back into the markets. So let's yeah, so that's really, one other thing I want to talk about before moving on is I want to talk about the intermediate database. That continues, that's at 66.94% bullish, and the models get run on Friday night. So those of you that are using Wavetech or Portfolio Expert, you will get the output somewhere around just before 9 o'clock tomorrow night. You'll have all the output, and this will be something that I believe we're going to see maybe a slight increase again. I think we saw a little negative rotation. We were up to around 72, 74% bullish. We came in to about 64. Now we're increasing again, and with these all-time new highs, and especially if we do get the positive reaction that I'm looking for tomorrow, then we're going to see these markets move much higher in this pattern. All right, let's go over and start going through the futures here, bringing up the E-minis. They're down 425 right now, and we're just, I mean, I can't even tell you how, I can't even tell you how boring it is to continue to talk about how this market is crawling along the 10-period moving average. That's been what I've been talking about it for weeks now, actually, probably 10, 12 days. That's all that we've been doing, and there's a slight upslope, but very slight. The PPM1 is at a 0.32, and that's just not non-existent trend, really. 0.25 is a trend, so we're way below that. PPM, then one thing that is happening is PPM2, I'll go back full screen so we can see this, but PPM2 here is starting to turn up and is trying to get through its first and second derivative, which is a positive. What we're likely to see happen here is if we can get a higher close tomorrow, we'll start to see a breakout across the board. Let's go over to the SPX. And you'll see this pattern very similar. We were able to close just below the 10 yesterday, back above it today, and we're seeing the market grid actually turn up. And I'll go back to that, and so you can just see what's likely to happen. And I'll go back to the futures and make sure we talk about the market grid there. But we look at the expectations. This is the S&P cash. We're looking at probably S1, R2. This will be an all-time new high. If we do that, that's 44.43, and then we're looking at 44.22. Could print down to 14. We could get an S2, R2 number just because of the potential for the volatility for tomorrow. Let me just go back to the E-minis here just for a second, just so you can see the grid on that as well. So S1 is 13. We basically have printed that already overnight. 44.13. The low's been 16 on the upside. 44.39. The high's 21. So we're just short of an R1. But for the range going through Friday, we're likely to see this S1, R2 be printed. Now, one of the things that's happening, I'm going to show you this. I'm just going to zoom in on the ppms here, is the way that the ppm1 is acting is a little curious, but I think it's just in this neutral mode because we've had so many days in a very tight range that is almost similar. I bet if you drew a line between the high-low of the last 10 days, you'd probably, the midpoint of that range would be right where we're trading right now. So there's really nothing out there that is really pushing, from a momentum level. I guess I've made that point clear. Just real quick, I'm going to go to the weekly chart, go back to SPX, and let's go to the weekly chart. And the weekly chart, we've basically have had an S1, R1 level. You can see S1 was 43.70. This was the numbers that were out on Friday night. The low 43.73 so far this week. The R1 44.19. So we printed up to 29. So we've been above that. So I remember mentioning I thought we could possibly get to R2, and that's still possible because today on Friday we're likely to see this thing get through into new highs and print up to that level. So looking at the NASDAQ, and this is also, all of these themes that have been going on for a while have been really very constant, I guess is the best word I'm looking for. We just like with the S&P, we're flowing along the 10-period moving average. We've actually managed to stay above it for the last 4 days. Today's likely to be more of the same. We're looking at right now the NASDAQ down 5 handles, are basically flat on the session. There's not going to be a lot of volume. They've traded 6,300 contracts here. The E-minis, I think last time I looked, were like 14,000 contracts traded. So there was nothing really going on there as well as far as the momentum or anything. It's just, this is probably one of the most boring markets to cover right now, and there's no way to make any bold predictions. And if you were just looking for clicks, that's what you do. If you're covering the markets and actually talking realistically, there's nothing really here. And I went through on Wednesday all of the longer term symbol, all the longer term signals and the trends that are out there. I'm just going to take a quick look at the weekly chart on the NASDAQ, and that range was S1 14,847, the low 14,849, so almost spot on. The R2 level was 15,184. We've been to 15,174, so possibly we'll get up to that R2 number. And it's just I guess if you had to summarize what I just said here, is you're probably going to get R2 weekly on the futures on the NASDAQ as well as on the S&P. So all of these numbers are just very well aligned. The markets are very stable here. Whether there's anything out there tomorrow that will shake that tree and make it change, I don't see it right now. There's just nothing there. And it's going to be, like I said, I'm somewhat encouraged by the database getting back above 42 real quick. I'm glad we had another negative day. Maybe it would have pushed it down and we would have been more into this sideways range. And if you look at, if you go back the last, we'll say the last 2 weeks, we have moved higher, but overall that slow slope is just not really driving the markets any higher there. So let's take a look at the the Russell, and the Russell had a pretty good day finally for once. It was up 1.8%. Sounds good, but it's been so weak. It really, I'll show you on the spread here in a minute, but it really isn't actually doing much there as far as the patterns go at all. We're trading right up into the range I've been talking about all week, which is 22.61. We hit 56. Can we get over 22, the 57 to 61? We'll have to see if we can get above that. This is a weekly chart that we're looking at right now. So that's going to be the real key number. 56 high, we're right there, 57 to 61. That was the numbers I've been talking to you about that are going to be major resistance. And we actually have trend mode on PPM 2 and PPM 3, which tells you there's a fair amount of resistance here. Let's take a quick glance at the spread chart. And this is somewhat interesting in that it ticked up a little bit, but not by much. And the best thing that can happen on this spread right now is that we'll stabilize here. But I continue to expect to see that these large caps and the techie large cap area, the Fangmans, all those guys are going to continue to be the leaders in the markets. The value, the small caps are not going to be players right now. I think there's some things that we'll talk about next week as the markets happen so that we can start to put a handle on exactly what's going on from that standpoint. But I just don't see that kind of rotation happening out of this market. And, you know, we're in the middle of a pretty major earnings season. And in spite of all the beats on earnings and all that, there's been no real effect from the standpoint of what the markets are actually telling us on any level. That's why the indices have been flat, the spread has been flat. There's just nothing there. I mean, so maybe I argued in the beginning that there is not a, we'll call it summertime blues, but it sure sounds like I'm talking about summertime blues, just a lot of inactivity. But I do see this month, everybody's talking about seasonalities, all that stuff. I've been around a long time. You folks can look at me and see that, but I've been doing this for a very long time. And the seasonality stuff for the most time, I mean, that's a hit or miss. You're better off flipping a coin. There's some things that are very seasonal, but these market indices and sell in May and go away, that didn't work again. There's just a lot of stuff out there, all those little cliches, and a lot of those cliches came from a long time ago, even before I was in the market. So it's, you know, that's not something you want to base your positions on, those type of cliches or seasonality that you want to really, and that's why with our software, that's why we actually focus on individuality. We look at every stock, every symbol, everything in our database, all 16,400 of them, as an individual symbol. We don't look at, well, the S&P is going to go up, so everything's going to go up. No, we look at each individual symbol to make that determination. And then when you get in at the portfolio level, now you're really micromanaging the elements of a portfolio. And that's pretty much, if you look at a mutual fund manager or those folks, that's what they're doing. They're constantly trimming and adding and taking things out. That's how it works, right? I always call it, it's like you might like Jimmy Dean sausage. Those of you that might be overseas, that's just a sausage company. So you might like it, but you don't want to see it made. If you see it made, you'll never eat it again. And when you're doing portfolio management, there's a lot of clippings, a lot of things that change and constantly are moving, even in the mutual funds and ETFs, all of those stuff. You know, not everybody's like Kathy Woods and just buys the dip every time it goes down. That's not usually how it works. But there's a lot of dynamics that happen in managing those things. So let's go on and take a look at let's go to the 10-year. Like I said, we fell just short of coming into the 1.22 level, 1.217, so it's right there. So if we look at this pattern here, this is the weekly. I've been arguing that we're going to get back toward this 40-week moving average, which right now is up at the 1.31 level. It's actually still rising at 0.68. I believe we're going to come into this convergence here. I don't think I can draw this very clearly. I'm going to attempt to draw it actually. Let's see what we come up with here, because I think this is what you're going to see on the interest rate from that standpoint. And all these lines are going to be the same, but this 40-period moving average is rising through here, and all of these are going to roll through. And what we should see here, I'm just going to draw a box around this area. We should see a stabilization around here, setting up a bottom, and then we'll start to move up. I still think we're heading toward this 1.9 level, which is the 200-week moving average. This pattern, I believe, will come into play. And ultimately, this is a larger pattern here of this is the corrective phase, and then we start to move up. So I am still in the camp of a couple things, which are that the interest rates are going to continue to move higher. Inflation's going to continue to be present, and we're going to see some upward pressure on interest rates there. And I would just say go watch the replay of the live stream on Wednesday on the indexes, because I went into a lot of details in that first hour. So if you have the time to do that, then that's something you could do, and you'll find out a lot of good information there, at least from the viewpoint of what all the technicals and the quant stuff is telling me right now. Just real quick, I'm going to flash over to the daily chart here on the 10-year, and we're right at, this is something I talked about. If you've been watching the channel every night, I see a lot of familiar names. If you're watching this, what you'll see here is that I talked about the PPM starting to bleed off all the downward pressure. Just yesterday, this thing was at minus 0.77. Now it's at minus 0.39. One more sideways day, and it's already cut through its first and second derivative. PPM2 has cut through its derivative. And this, what I was talking about yesterday, is you'll start to set up a bottoming pattern. Now, is this the beginning of a big increase in yields from this level? Maybe not. We've been having a lot of cycles come in. You see these dots on the screen. We do have another cycle coming in today, and I believe these are bottom cycles that are coming in at these levels, especially with the PPMs. All three PPMs are turning up at the same time. You notice that they've got, I'll just put a cursor by these. Each one of them are turning up through even their first and second derivative, or at least the first, especially on PPM3. So all of the downside momentum here is going to bleed off. We should set up a larger pattern that will move us back to that 130 level I just talked about a minute ago, ultimately moving back to 135. So that tells you what? That, just to summarize what that is. And I saw the comment on my virtual desk. Yeah, it just looks better than just bookshelves in the back. I'm tired of the Zoom bookshelf look. But a lot of what we're seeing in the interest rates and everything that's starting to unfold here is going to ultimately come back into that inflation play, and that's going to keep us expanding. Otherwise, interest rates rising. They should bottom here. There's no big bull market in bonds coming. That's the one thing to fade Harry Dent on. It was interesting. I ran across a video a couple months old. It was telling you to sell equities and buy bonds. Now, bonds have actually done, that part of it was right, but it was just a really weird messaging, and anyway, it's just really weird. Like I said, I believe so many people are looking through the prism of the old view of the world, and I might be an old guy, but I'm very progressive in how I believe the economy's actually change. I've watched a lot of change over the years, and there isn't a damn thing that's the same when I started in 1980 with the economy, market structure, you know, everything is completely different. How we trade, digitalization, you know, now fractional shares, everything's completely different. So to look in the rearview mirror and be like Ray Dalio and talk about, you know, the debt cycle of 100 million years and all that stuff, none of this stuff matters. Okay, I'm telling you. Well, maybe it will at some point in time, but that's just really good conversation. And Ray's a smart guy, so I'm not taking that away. I've been a fan, and I was a fan until he stepped down as the head of Bridgewater. And I had a friend that used to work for Ray many, many years ago, back in the 80s, actually. And, you know, so I'm a fan, but I liked it better when he didn't talk very much, when he was very mystique. I've actually said that on his LinkedIn channel from time to time. I will not troll him, but I just liked it when he was very mystique. Now it's very open. You can find 100 of these guys talking about the 1970s and all that kind of stuff. It's not the 1970s. I graduated from high school in 1970. Guarantee you it's not. So I'm anxious to get this video together and get this stuff moving. Let's see, what we're going to do next is I'm going to cover, just because we're coming in the weekend, I'm just looking at a couple markets here, nothing really going on, but I'll cover Bitcoin and gold, and we'll call it quits, and we'll end up about 45 minutes. So I'm just looking at a couple of things. And, oh yeah, I did say I was going to go through that uranium. So I'm going to see if that symbol is in TradeStation, if I have access. If not, I'll bring up a TradingView. I will do it very last. So let's go ahead and let's go to Bitcoin here. I've been talking about the upward slope in Bitcoin. We're at 40,100 right now. I still think we're going to head to the 200-day moving average right now, which is at 42,632. The PPMs are kind of fading here, but they're still very positive. So this 10-period moving average is going to be key. As far as the range, as we come into the weekend, where you're probably going to look at around 35.6 to that 42.6 number should be the absolute range of the next several days. So let's take a look at the weekly chart. And the weekly chart, and I talked about this on the live stream the other day. I'm pretty bullish here, especially with that weekly reversal we got a couple of weeks ago, when everybody was talking about, you know, going to 20,000, 16,000, 12,000, the end of the world. Well, that didn't happen. We got this huge reversal. I love the fact that we got back above this 40-week moving average. This is a weekly chart. We got a upward slope on the PPM 3 at 1.73. So this will be, I believe, for even coming into next week, the range that we're going to be looking at here, let me bring that on screen so at least you can see that, is going to be between the 10, which is 36,300, and that higher end as high as 44, we'll just round it off, 44,500. So 42,600. If it breaks above that, 44,500 will probably be the extreme, and then we're probably going to consolidate for a little bit before anything happens. So we'll start top down, go with gold next, and then I will cover uranium to close out the session for tonight. So we're looking at all of the moving averages in this pattern being clustered together. The 10, 21, and 40 period moving averages, 1818, 1808, 1824. So far, overnight we've got for the week we have an 1803 low and an 1835 high. That's where I told you all the resistance is up around 1834. It printed 35, and I don't see that changing. The PPM1 has got a lot of downward pressure, and this suggests that ultimately we may come down and try to test that 1750 low. It's somewhat vulnerable here. PPM2 is the only thing that's likely to save this thing because there's enough upward momentum in this to keep us sandwiched between the we'll call it 1800 and that 1824 level. If we hold this level and we stay stable here, we'll probably be okay, and I'll obviously update this on Sunday night's action. And I do have the uranium ETF, the what is this? URA, so we'll cover that to complete. Yeah, this pattern is, you've got the PPM1 down 1.17. It's pretty big downtrend, but you have support at the 1962 level. We're trading below that 1639. That's the number I was looking for. The resistance, that was not on the right bar, apologize. Looking at 18 bucks is going to be the absolute low, but you're in a big downtrend here. The PPMs are all trending lower. We're most likely will set up maybe a low here. The key low in the pattern, which is this 1839 level, but 1800 is also going to be, so even if we did print a new low, we'd probably bounce back, but this has got a lot of work to do to get to go much higher. Let me take a quick look at the daily, so I've not looked at this before. Yeah, it's pretty much confirmed. You've got PPMs are trying to turn up here, but you still have a lot of negativity, lots of resistance, 1970, 73, and even if you get above that, you might be able to get up toward the 2067 level, but the numbers I mentioned on the weekly basis are going to be the most important things to look at. Okay, folks, here we are. We're ending another week. Once again, I really appreciate everybody watching the channel and all that stuff. Just going to continue to do these streams like I've been doing every night. Like I said, I get to drop the mic here when I'm done. No editing. It saves me a lot of time. So, continue to let me know anything you think I should cover, or, give suggestions. I listen. So I'm still teachable even at this age. So anyway, folks, once again, thanks for everything. And I saw a couple comments that, I've kept you in the market this year. That's good. That's a really, really good thing. I'm glad that the perspective has helped. As everybody knows, I'm very driven by the data coming out of our quant system. And I'm telling, the only thing that I would tell you is that the tool that we offer you guys on the Wavetech tool is very powerful, and it can help you even more. And anyway, so I'm not going to do a big sales pitch. That is what we're about here, and that's how we really. When I say I help you manage your portfolios, that's how I do it, and protect your wealth. We've been known through every up and down in this market, and I've been running the software that we have since 1998. Actually, 96 is when it all started. So we've literally managed almost 227 billion over the years, and there's just been a lot of money flow through the models and stuff. So anyway, have a great weekend, and you know, I'm not going to cover any individual stocks. I'm sorry, but I'm going to really work on next week and this weekend to get this video done. I'm really hoping, and I'm hoping now that I've hyped it a little bit, that it stands up to the test. Anyway, folks, have a great weekend. We'll talk to you on Sunday night, 9 p.m. as always. See you then. See you. Bye.